Focusing on building a business with the characteristics that drive value is not only going to improve your income and your cash flow, but it's also going to give you a lot more opportunities to exit your business on your terms when you're ready. So after the last video that I did, I had a number of people that reached out and just asked if I could go into a little bit more detail about the 3 parts of an exit plan. And so if you remember from the last video, those 3 parts are your business goals, your financial goals, and your personal goals. So today, in today's video, I'd like to talk with you specifically about your business and how the conventional way of thinking about exit planning is wrong and how you should be thinking about it. If you're ready to challenge your perspectives on exit planning and what you think about it, let's jump in. All right, so I want to take a moment and just ask you a simple question. And what I'd like for you to do is just write down your answers as they come to you. So if you need to pause the video for a moment and write those things down, perfectly fine. So here's the question. When you think about growing your business, what comes to mind? Now I'm going to go out on a limb here and say that you thought about marketing, you thought about hiring a new sales team, or entering into a new market, acquiring a new business, whatever it may be. There's a lot of really great strategies. Now, how many of you actually thought about exit planning as a way to grow your business? Now, my guess is that none of you did. And that's exactly why you and most other owners don't have an exit plan. You see it as something that you'll do in the future. Let me redefine it for you. Exit planning is just good business strategy. That's it. And the best planning that you can do happens now in the present, and it happens when you're not ready to exit. So in his book, Walking to Destiny, Chris Snyder talks about having 10 paradigms that really have to change in order for you to have a successful exit. And so I figured today we'll just jump into those 10 and go through them one by one to really give you an understanding and a better sense of what exit planning is for your business. So let's get to it. So the first shift that you have to make is to understand that business is personal. And what I mean by that is that your business should not dictate how you live your lifestyle. It shouldn't dictate where you spend your time and what you do with your family and when you do it, and how much time you have to give to the things that you enjoy. It's actually the opposite. Your personal goals and the things that are important to you should be driving your business. Your business is there to serve you and help you achieve those things. It's not the other way around. Now, I know a lot of you probably are thinking that that's impossible because you stay so busy in your business. But that's really the big change that has to happen in your mind, is that you have to realize the business serves you, not the other way around. The second shift that has to happen is to understand that value is the long-term goal, not income. So you might be focusing on income because you're thinking, that's the lifeblood of the business. You have to have income coming in order to keep running. And that's true. But what you're failing to do by focusing on the income is that you're not growing that value of your business. So once you get to a point later on where you're ready to sell or to transfer it to a family member, whatever it may be, there's not really much there that's attractive to those buyers. On the other hand, if you focus on building value, the cash flow, the income, it's all going to happen as a result of that. Number 3, focus on the present, not the future. I know that sounds counterintuitive to every other planning person you've probably ever talked to, or even just thinking about planning for your business. It's always future tense. It's always about what is to come. And I would even say that most exit planning publications are guilty of the same thing. They focus on the end game. They focus on who you're going to sell to and when you're going to sell it and how you're going to sell it, instead of focusing on what really matters, which is what you do today. The things that you do today and how you grow your business today and how you start planning for that growth intentionally has a much greater impact on the outcome. So focus on the characteristics that are going to build value in your business now, and you're going to give yourself a lot more opportunities to exit in the future. Number 4, manage your 5 stages of value creation. And again, this is about focusing on the value of the business and less about the income. So the 5 stages are to identify, protect, grow, harvest, and manage. Now, the first stage is to identify, which just means being able to point out the intangibles that make your business valuable. The second stage is to protect that, whether that's through insurance or it might be through contracts with your customers. There's a lot of different ways to protect it. And then the next stage is to grow the business value. So that's focusing on the things that you know drive the value of your business so that the value grows. And then the fourth step is to harvest that value. So eventually that's your exit. That's when you take advantage of all the hard work that you've done and you exit out of your business and you extract that value out. And then the final stage is to manage that value. So once you've pulled it all out, now how do you make it last? How do you make it continue to grow for you, but in different ways? Number 5 is your intangible assets that must be transferable, not your tangible assets. You may know your business inside out, and it might provide you a great lifestyle, and you might think that anybody would want that same lifestyle, and your business can offer that. But you really have to understand the difference between having a business that's attractive and being ready to sell. So while you may think that the business is attractive, there's the intangibles there that if you can't explain well or that can't be easily seen by the buyer, they're not going to be interested. And then you don't have anything to show for. Number 6, don't just start projects, create a process. So a lot of us are really great about just diving headfirst into the next project or whatever it is that we're trying to complete, but we often don't want to take the time to stop and create a process for how we want to get it done. Now, creating a process is going to be what keeps us organized. It's going to tell us what to focus on and when. And that's really important as you're focusing on building value in your company because you want to be doing the things in the right order so that you can maximize that growth. Number 7, you must execute. Having a plan is great, but it means nothing unless you're willing to execute on it. And I know that's often challenging because there's a lot of people out there, a lot of experts that'll tell you, the what you should do and, give you the plan for what to do going forward. But a lot of times you're left without the how do I do it? So you know what to do. You have a plan on what you're supposed to do, but you don't know how. And so the Exit Planning Institute has a great terminology that I like to teach, and it's called the Value Acceleration Methodology. And that is the execution plan. That is a step-by-step guide on how to actually execute the plans that you create. Number 8, measure your results. Or another way to put this is to understand what is the real value of your business. What is it worth? And I'm not talking about the tax value because when it comes to taxes, the goal is to minimize the value of your business, minimize your cash flow and your income because you want to pay as little in taxes as possible. On the flip side, when you're wanting to sell your business, you want to sell it for the maximum value that you can. You want to extract the most wealth out of it. So that's where you need to be able to look at and see if you're on track. So when you start the process of exit planning, one of the first steps is to know what your business is worth today, and not just that tax number, but actually knowing what someone would purchase it for today, because that allows you to measure your growth as you're implementing your plans. Number 9, it's not about you, it's about your team. I know this is really tough probably for some of you because you're afraid of letting your team know that you're thinking about your exit. And it may be a long way off, but the thought in the back of your mind is that if I let them know that I'm planning to leave at some point, they're not going to stay committed. But what you and a lot of other business owners may not realize is that your employees are already wondering what the business is going to do if you're not there. And if you don't have a plan in place, they're actually more concerned about that than they are about you having a strategic plan to leave in the future. Because that's going to give them more certainty And that's really important for you too when it comes to exiting, because you want to make sure that your team is going to stick around when you're gone and have that continuity for whoever the next owner is. And finally, number 10, you have to invest in your success. Now, I know you're familiar with buying equipment or paying for services and software and things like that to run your business. And those are great because you're able to monitor the process or the usage of those things. You're able to see clearly how it benefits your business. And I think what happens is that when it comes to investing in your business in some of those intangible ways, it's a little harder to quantify. And that's why I said before, you want to have a system that's in place, that value acceleration methodology, to be able to track the growth of the value in your company. So don't be afraid to invest and spend money into it, because you have a plan and a strategy and a way to monitor your progress, and that's going to lead you to success. Okay, so to recap what we've covered today, there's 10 paradigm shifts that have to happen. The first is business is personal. Number 2 is value is the primary long-term goal, not income. Number 3, focus on the present, not the future. Number 4, manage your 5 stages of value creation. And number 5, it's your intangible assets that must be transferable, not your tangible assets. Number 6, don't just start a project, adopt a process. Number 7, you must execute. Number 8, measure your results. Know your real number, not just your tax number. Number 9, it's not about you, it's about your team. And number 10, you have to invest in your success. So if you've stuck around to this point, I know that we've covered a ton of things today, and I really hope that I've challenged you to think about exit planning in a different light. It's not some far off event that happens in the future. It's something that you begin executing today that leads to a successful exit in the future. And it's not just something that happens then, but you also get to experience the benefits and the rewards of doing that today. So if you have questions, again, I'm always happy to help. Please feel free to shoot me a message or reach out for a free strategy call. And I appreciate you watching today. Look forward to seeing you soon.